Good morning, everybody. This is Todd with the Forex Nitty Gritty Insiders Daily Video. Hope things are going well for you and the market is treating you well. We are just kind of still at the beginning of the week here. It's Tuesday, and not much news reports coming out today other than the consumer confidence number in the U.S., and this is a survey of various households regarding the level of their current and their upcoming or future optimism, so to speak, of the economy. And there's 5,000 households that are surveyed, and that is basically what it's looking at. Now, if you look at the confidence numbers over time, they were kind of, if we look back at the last 13 years since 2000, the number in 2000 was up around 140. 2004 was around 100. 2008 was about 80 to 90. And since then, it hit a low in 2009 of roughly 25. It has been building up since then. Currently, the forecast is it to come out at 64.8. So about half is what it was in 2000. But it's slowly growing from here. So that's the number that's coming out today. Now, tomorrow, just as a reminder, the FOMC statement interest rate is coming out, and that can always cause the market to get a little bit flaky in how it's reacting to things. Pre-market in the U.S., we are negative. We're going to expect a low opening. The market's opening lower than yesterday, so we'll keep an eye on that. Gold and oil. Oil right now is at $96 a barrel, almost 97, and gold's at 1662. So both are up slightly. What I wanted to talk a little bit about today is using a intermediate term chart to help us identify the direction that we should be trading on the shorter term. And so let's say that for our example that we make our trades based off of a 15-minute chart. And so as we look at the 15-minute chart here, this happens to be the US Japanese yen, we're going to look for the trend of this chart. We could use a 40-period simple moving average, whatever we really want to use on here. Let's get this up here. We'll do a 40 simple moving average. Right now the price is moving down. The moving average is going down. The price is moving up. So we have a little bit of a discrepancy there between the two. But in order to have some added confidence, we can use an intermediate term like an hourly chart of the US Japanese yen, and we can say, okay, well, right now we're making lower lows and lower highs. We can draw some simple channel lines on here, and we can see that channel's in a downtrend. The moving average is pointing down, prices below it. So overall, the trend is bearish right now on the intermediate term. So as we go and we look for opportunities to trade the 15-minute chart, what we can do is we can start to look for a move back in the direction of that intermediate term. So in this case, we blow this up with the trend even on the 15-minute being down, putting our entry here below the lowest low of the last three. 1, 2, 3 would be right here. When this one closes, we're going to be about the same. But we can watch this and we can start to look for those opportunities that are going to allow us to trade in the direction of that intermediate term chart. Now you may choose a 4-hour or whatever, but the idea is that we take a chart that is higher time frame and look to use that to help us confirm the direction that we should be trading on the shorter time frames that we're doing. And you can do that obviously on any chart. So take some time to review that and see if it can't help better identify when to enter into your trades. And we'll be back tomorrow to see how the markets react and answer any questions that might arise. Until then, have a great rest of the day, and we'll talk to you soon.